I'm here with Dr. Richard Barkham from the Grosvenor Group talking about commercial property and residential property prices. What do you think is going to happen with house prices over the next couple of years?
Well, I think we don't see the housing market collapsing. Indeed, there's been a revival in the last 4 to 5 months, particularly in London. But we do see the key short-term drivers being relatively negative. In terms of employment growth, the labour market is key for the housing market. Unemployment hasn't risen anywhere near as much as we might have expected, given the fall in GDP. And that points to companies hoarding labour. But if there isn't a revival in global demand, there's a relatively limited amount of time that companies are going to hang on to labour. So if the current growth, the revival in the world economy stalls, or there's another shock that we haven't seen, then I think there could be a surge in unemployment, and that would be very damaging for the housing market. I think the labour market is the key risk there. Another risk is some sort of bond market event, around the public finances. It just may be that, as we've seen with Greece and Spain to a certain extent, that bond investors will become worried that the UK won't get its public finances under control. They will begin to sell off bonds, put long-term interest rates up, and that will feed through into mortgage rates, and that would be quite damaging. And you'd sort of have to think that any sort of hung parliament might be a catalyst for some sort of bond market event that feeds through into house prices. So, we're worried about that as well. We certainly don't see any of the growth that we've seen over the last sort of 5 to 6 years. Mortgages are becoming more available, and that's positive for the housing market. And whilst mortgage rates will be relatively constant for the next couple of years, over the next 5 years, the whole of the property sector has to get used to the idea that there will be a rise in interest rates, and that's negative as well. So I think in the short and medium term, whilst not being overwhelmingly negative, there's not much impetus for growth in the housing market. In the case of the UK though, longer term, we don't build many houses, so supply is pretty much inelastic, and we've got, if the economy revives, quite considerable in-migration forecast, and that increase in demand relative to a relatively fixed stock is in the long term what gives us quite high real rates of house price growth in the UK. London in particular, the last forecast I saw was that to 2020, London has to absorb another 770,000 people, population the size of a city of Leeds, and against a relatively fixed supply. So that is supportive. The long-term factors are relatively supportive of house prices in the UK. Short and medium term though, lots of risk, not much impetus for growth, probably the housing market trading sideways, with some niche markets performing differently.
Talking of niche markets, London seems to be doing particularly well at the moment, and some people are saying that's overseas speculative interest. Would you agree that's what's going on?
It depends what you mean by speculative. It is certainly overseas interest. If you look at the prime housing markets in London, we've noticed that they tend to reflect not just UK economic growth, but OECD growth and emerging markets growth. So there's a huge appetite for demand for prestige property in London. Whether it's speculative or not, I don't know. Quite often you'll find wealthy Chinese want to buy flats for children studying in London. So, it's partly speculative and partly sort of user demand for housing. So there's certainly demand from overseas, and the fall in the pound has made UK real estate extremely cheap for the stronger currencies, overseas currency buyers. And the other thing that drives prime central London housing is obviously the performance of the stock market, and that has revived strongly since Q3 2009. And as that feeds through into bonuses and remuneration, we see that having a really positive impact on prime central London house prices.